Hi, this is Money House Media, your savings channel for smart real estate moves. Tap subscribe so you don't miss the money tips in this one. Imagine a world where the value of your biggest asset, your home, isn't determined only by human judgment, but by algorithms trained on millions of data points. That world isn't coming, it's here. Today we're pulling back the curtain on how artificial intelligence is already reshaping real estate valuations, and how that shift can protect your wallet the next time you buy, sell, or refinance. Big voices are signaling how massive this gets. Elon Musk called AI the most disruptive force in history. Jeff Bezos says we are in an AI bubble, but the long-term payoff for society will be gigantic. And BlackRock's Investment Institute lists AI as one of 5 global megaforces reshaping markets. We'll translate what that means for your street, your comps, and your bottom line. For decades, appraisals relied on a pro walking your property, checking public records, and choosing comps. That still matters. But here's the problem. Comps can be weeks or months old. They miss where a neighborhood is headed. Transit expansions, insurance risk changes, or future development. In fast-moving markets, that blind spot can cost buyers or sellers tens of thousands. Good news, lenders and regulators are modernizing. Automated valuation models, AVMs, and hybrid approaches are now part of the toolkit, with new federal quality control standards finalized in 2024 to ensure confidence, reduce conflicts, and guard against data manipulation. Translation: AI is moving from shiny toy to regulated bank-grade infrastructure. Here's your side-by-side. Real-world checkpoints you already know. Zillow's Zestimate and the Redfin estimate. They're not appraisals, but they show what scaled AI looks like. Typical on-market median error rates near 2%, and higher for off-market homes. Used correctly, these tools help you triangulate value, not replace professionals. Meanwhile, the mortgage system itself is changing. Fannie Mae has value acceptance plus property data. Certain loans may not need a full appraisal if property data is collected and the model is confident. That's AI and structured data streamlining value for specific lower-risk cases. What can AI see that humans often can't in time? Hyperlocal trends, micro-neighborhoods, not just zip codes. Future infrastructure, new transit lines, schools, commercial anchors, that historically correlate with price shifts. Meta-studies and city-by-city research show proximity to quality transit can command property premiums, sometimes 5 to 8% plus, depending on the project and market. Hidden risk, climate-driven insurance exposures, wildfire, flood, increasingly hit monthly costs and values. Independent research finds risk disclosures can reduce prices. Newsrooms are tracking how rising insurance premiums are reshaping budgets across states. Digital demand signals, search trends and sentiment data can act as early indicators of housing activity and price direction, useful inputs for forecasting models when handled carefully. Important caution: algorithms can be wrong, especially when regimes shift. Remember when one major player tried to trade houses off its own pricing model and had to shut the program after big losses? Lesson: AI is powerful, not infallible. Always cross-check. Meet Ryan and Maryanne. List price, $550,000. Traditional appraisal pegs value at $545,000. Solid. But their advisor also checks AI-driven insights. A planned bus rapid transit stop is funded and cited a 10-minute walk away. City permits show a grocery-anchored retail center breaking ground. Neighborhood insurance rates are stable versus adjacent zones. The probability-weighted forecast favors above-average appreciation over the next 3 to 5 years. They negotiate confidently and close. 3 years later, benchmark comps and transit completion data arrive on schedule, and their home appraises around $640,000. Contrast that with a buyer who purchased nearby without checking climate insurance overlays. Premium hikes clipped demand in that micro-pocket, dragging values. Narrator aside, reinforce that this is a composite, illustrative scenario using real data dynamics like transit premiums and insurance risk, backed by the studies we cited. Here's your money savings playbook. Triangulate value. Compare the appraiser's report, your agent's CMA, and at least 2 AVMs, e.g. Zillow plus Redfin. If they disagree, ask why. Model error bands widen off-market. Ask your lender, Are you using an AVM or hybrid? What data drives it? What's the confidence score? The new federal standards exist to keep AVMs high quality and fair. Use that to your advantage. Check the future, not just the past. City planning portals, transit environmental reviews, and major permits. Proximity to quality transit often supports value, but study the specifics of your corridor. Stress test insurance. Quote, wildfire, flood premiums, and deductible scenarios before you write the offer. Price sensitivity is real in many markets now. Document accuracy. Correct property facts that feed AVMs. Beds, baths, SQFT, permits. Small data errors can skew automated values. Pros who speak AI. Work with appraisers, agents who understand model inputs and limits. A human can spot outliers. An algorithm can't walk your block. Are appraisers going away? No. Most loans still require human oversight. But expect a hybrid world. Humans on top of AVM rails, with broader acceptance of appraisal alternatives on lower-risk files. Fannie Mae has already operationalized versions of this, and regulators have laid down national AVM quality standards. Expect more speed, more consistency, and better fraud risk detection. What about the big picture economy? If AI truly boosts productivity, it can lift incomes and reshape affordability over time. Larry Fink at BlackRock has explicitly tied AI to productivity and wages, while classifying AI as a megaforce shaping markets. Jeff Bezos says the hype is real, but so are the long-term benefits. And Elon Musk underscores the scale of disruption ahead. Your takeaway: position yourself to benefit, but verify every number. If you're buying, selling, or refinancing, use this blueprint to save money and avoid surprises. Want help pressure testing a property's value with traditional and AI-driven views? That's what we do here. Tap subscribe for more savings-focused guides, and share this with someone house hunting right now. This video is for educational purposes only and is not financial, legal, or lending advice. Products and eligibility vary by lender and program. Always consult licensed professionals for your situation. NMLS 1020597. In the land of data, knowledge is equity. Location matters, but in an AI era, information can be the difference between overpaying and winning the deal. The best time to buy a home is always 5 years ago, quote by Ray Brown.